What if I told you that one of the biggest stories in the silver market isn't making headlines? While most investors are focused on interest rates, inflation, and the Federal Reserve, something unusual has been happening behind the scenes at COMEX, the world's largest precious metals futures exchange. Some market participants believe recent inventory movements could signal tightening physical supply, while others argue they're simply routine adjustments. Either way, these developments have sparked intense debate among traders and long-term investors. So the real question is, has COMEX just revealed a hidden clue about where silver could be headed next? Let's break it all down. Welcome back to Warsh Wealth Core. If you're serious about silver investing, this is one video you don't want to miss. Today, we're exploring what COMEX inventory data actually tells us, why physical silver matters more than many people realize, how Federal Reserve policy, under figures like Kevin Warsh, influences investor sentiment, and why the next few months could be critical for the silver market. Let's get started. Section 1. What is COMEX? Before we dive deeper, let's understand what COMEX actually is. COMEX is one of the world's largest futures exchanges for precious metals, including gold and silver. Most contracts traded on COMEX are financial instruments, meaning many traders never take physical delivery of the metal. Instead, they use futures contracts to hedge risk or speculate on future prices. However, investors pay close attention to COMEX warehouse reports because they provide insight into the amount of silver available within the exchange system. Changes in inventories don't automatically predict price direction, but they can become an important piece of the bigger picture. Section 2. Why inventory matters. Here's where things get interesting. When physical demand rises while available inventories tighten, market participants naturally begin asking questions. Is industrial demand increasing? Are investors choosing to hold physical silver instead of selling? Or are normal inventory transfers simply being interpreted as something larger? The truth is that inventory data should never be viewed in isolation. Successful investors combine it with other factors, including mining production, industrial consumption, ETF flows, inflation trends, and central bank policy. Silver's unique role makes this especially important. Unlike gold, silver is heavily consumed in manufacturing. It's essential for solar panels, electric vehicles, medical technology, semiconductors, and countless electronic devices. As technology continues advancing, industrial demand remains a major long-term driver. Section 3. Kevin Warsh and the Fed. Now let's connect this to the Federal Reserve. Kevin Warsh has consistently emphasized the importance of maintaining price stability and preserving confidence in monetary policy. When markets expect tighter monetary policy, precious metals sometimes face short-term pressure because higher interest rates can strengthen the US dollar. But there's another side to the story. If economic growth slows while inflation remains persistent, investors often return to precious metals as a defensive asset. That's why silver doesn't simply react to interest rates. It reacts to changing expectations. Every inflation report, employment number, and Federal Reserve meeting has the potential to reshape those expectations almost overnight. Section 4. The bigger picture. The biggest secret isn't necessarily a single COMEX report. It's that the silver market is influenced by multiple forces all at once. Industrial demand continues to evolve. Global uncertainty remains elevated. Mining supply faces long development timelines. Investors continue debating the direction of Federal Reserve policy. When all of these factors begin moving together, volatility often increases. That's why experienced investors spend less time chasing headlines and more time studying the broader market. Rather than asking what happened today, they ask what trend is developing over the next several years. That's a completely different mindset. Conclusion. So has COMEX revealed a massive silver secret? Perhaps the biggest lesson is this. The silver market is far more complex than a single price chart. Inventory reports, industrial demand, central bank policy, inflation, and investor psychology all play a role. No single indicator can predict the future. But when you understand how these pieces fit together, you're in a much stronger position to make informed investment decisions. Call to action. If you enjoyed this analysis, don't forget to like this video, subscribe to Warsh Wealth Core, and turn on notifications for more updates on silver, gold, Kevin Warsh, Federal Reserve policy, and the global economy. Question for you. Do you think COMEX inventory changes are an early warning signal for silver prices, or are they being overinterpreted? Let us know your thoughts in the comments below. Thanks for watching, and we'll see you in the next video.